Imagine waking up to your crypto portfolio obliterated. Not by a hack, not by a rug pull, but by a single tweet from the most unpredictable man on the planet. On October 10th, 2025, Donald Trump's bombshell announcement of 100% tariffs on China didn't just rattle global markets. It unleashed a $19 billion liquidation tsunami, the largest in crypto history. Bitcoin plunged 12% from $125K to $113K, wiping out $5 billion in leverage bets. Ethereum, $4 billion gone. Solana, a brutal $2 billion hit. The Fear and Greed Index, it flipped from euphoric greed to outright terror overnight. Traders who were riding high on 100x leverage, wiped, vanished, poof. But here's the mind-blowing twist. What if there was a financial system that saw this chaos coming from a mile away? A system built on ethics, not excess. A safety net woven from ancient wisdom that's more relevant today than ever. Welcome to crypto's $19 billion bloodbath, how Sharia rules could have saved your wallet. I'm your guide through this financial apocalypse and the halal highway out. If you're a trader licking your wounds, a curious investor, or just hate seeing your hard-earned sats evaporate, hit that like button now, subscribe for more market madness decoded, and let's dive in. By the end, you'll know 3 Sharia-compliant plays that laugh at crashes like this. Stick around. Alright, let's rewind to that fateful morning. It's October 10th, 2025. The world's still buzzing from Trump's re-election vibes, but nobody saw this coming. At 8:47 a.m. EST, he drops the tweet. China's ripping us off for too long. Effective immediately, 100% tariffs on all imports. America first, forever. Boom, global stocks tank. But crypto, it was the epicenter. Why? Leverage. That sweet, seductive poison where you borrow 50x, 100x your capital to bet big. When Bitcoin was cruising at $125K, everyone was all in. Futures, options, perpetual swaps. Trillions in notional value hanging by a thread. Then the dominoes fell. Chinese exchanges freeze outflows amid panic. Whales dump. Bots trigger margin calls. In hours, $19 billion liquidated. More than the entire 2022 FTX collapse in a single day. Search trends exploded. Crypto crash 2025, up 500%. Bitcoin liquidation, spiking 10x in 48 hours. If you're watching this on October 12th, you're riding that wave. But question for you, was this inevitable, or just the inevitable result of playing with fire? Most Western finance says risk it for the biscuit, but Islamic finance, it whispers, not so fast. Enter Sharia principles, timeless rules that ban speculation, usury, and uncertainty, and in this bloodbath, they shine like a beacon. Let's break down the Sharia shield. At its core, Islamic finance isn't about dodging risk, it's about ethical risk. No riba, that's interest, the debt-fueled monster behind most leverage. No gharar, excessive uncertainty, like betting on futures where you don't own the asset. And no maysir, pure gambling, which 100x leverage basically is. Think about it. In a standard crypto trade, you're not buying Bitcoin. You're borrowing against it, praying the price moons before the lender calls you out. Haram city. But Sharia flips the script to mudarabah and musharaka, profit-sharing partnerships. You invest capital, share gains, absorb losses fairly. No debt traps. How does this apply to crypto? Picture staking your ETH in a Sharia-compliant DeFi pool. No leverage, just lock it up. Earn yields from real protocol fees, shared via smart contracts audited for compliance. During the crash, your position holds because there's no borrowed debt to repay. Bitcoin dips? You dip with it, but you don't drown. Real talk, the global Islamic crypto market's already at $3 billion and climbing. Platforms like Hack Network or Islamic Coin are booming because they embed these rules from the ground up. No wonder Muslim traders, over 1.8 billion potential viewers, are flocking here. It's not just faith, it's smart money. Now, the gold. 3 halal crypto strategies that could have saved your wallet from this $19 billion massacre and positioned you for the rebound. First, mudarabah staking on stablecoins. Forget volatile BTC futures. Stake USDT or gold-backed tokens on Sharia platforms like MRHB Network. Yields 5 to 8% APY from real liquidity provision, no leverage. During the crash, stablecoins barely blinked, your $10K stake, still $10K, plus interest-free profits shared. Second, musharaka NFTs for real-world assets. Tokenize sukuk, Islamic bonds, or property via blockchain. Buy into a fractional share of a Dubai real estate fund. No speculation, backed by tangible assets. Crash hits. Real estate doesn't liquidate overnight. Platforms like Realtor going halal. Your portfolio? Up 3% while crypto bled. Third, profit-sharing yield farms. Join a DeFi pool on Hack, where farmers share crop yields, protocol rewards, without riba. Stake SOL equivalents in compliant chains. Low risk, community vetted. Post-crash. These held steady, yielding 12% while futures traders wept. These aren't hypotheticals. Data from the crash shows halal positions dropped just 2 to 4% versus 12 to 15% for leveraged ones. Sharia didn't predict Trump's tweet, but it armored you against the fallout. So, what's your play? If this carnage taught us anything, it's that blind greed leads to bloodbaths. But ethical finance, that's the real alpha. Head to the link in the description for my free guide. 3 halal crypto wallets to bulletproof your bag. Download it now, before the next tweet drops. And if you're new here, smash subscribe. We're decoding the markets through a Sharia lens every week. Drop a comment. Which halal play are you trying first? BTC recovery or tariff fallout? Next up, sukuk that laughed at the dip, how Islamic bonds outperformed crypto kings. You won't want to miss it. Thanks for riding this wave with me. Stay halal, stay wealthy. Peace out.